Thank you for tuning in to another edition of the Vulcan Report. This is an intraday report for trading on November the 15th, Tuesday, 2016. You're looking at a chart right now of ticker symbol NAK or NAC. And as you can see, this market has pretty much exploded pretty nicely, getting back above that dollar handle. If you recall our previous videos, you would see that the market is following a very interesting trajectory now and is going to be shooting to continue to make 52-week highs, which is great because that's really what you want to see in stocks trading under $5. So as it stands right now, support is at 70 cents, and this market is looking to continue to close today above a dollar and probably stay there as it gets up to probably about $1.50 before you see any sign of pullback here. But this is a really strong breakout candle. All right, looking here at the JNUG, we got a similar situation going on here. This market hit a high today of $8.35, and you can see that currently it's at 8.29, so it's making a run too. You have your first line of resistance at 8.67, and then your second is at 10.96, and then the third would be $14.23, which is right here, and then that will put us right there below the Kumo cloud of around 15 bucks. And I do think this is going to try to get somewhere in the cloud before any kind of correction back to the $14 trend line, which should be new support going forward as this tries to break out of the Kumo cloud at around $21. Looking at Nugget, similar situation. Overhead resistance is at $10.18. Next resistance is at 12.54, and then the next one would be at 15.85, putting it below the Kumo cloud of around 17 bucks, and it should try to peak out somewhere probably around the $25 level before correcting, and then $20 should be a nice strong support going forward. All right, looking at AG. AG is following a similar trajectory. Overhead resistance now is at $9.77. So far the market hit a high today of $8.97, and that will put it right here below this Kumo cloud here. And this one has a way to go. It's probably going to try to make a run somewhere near 12 before correcting, and I'm going to say the $9 to $10 range should be support if it's going to try to make a run for the $14 and break out of the Kumo cloud. All right, taking a look here at Slick Rick, Pretty Ricky, ticker symbol RIC. You can see this one is also trying to follow the same trajectory. It's going to have resistance at $7.18, then at 8.28, and then the next one's going to be at 8.96. So this one will put it right here below the Kumo cloud once it breaks that $9 range. There's a thin layer here, so $10 should be the cracker ceiling that it should be able to get right through. Thin layer cookie type of a layer. It should get up to about $11. $10 should be the new support going forward on its way up to 12 here on the Pretty Ricky. And it's following that trajectory on the weekly chart. Let me just show you what I mean. All of these are going the way of the trajectory as indicated. See, it's following the ramps. All right, following the ramps. All right, so watch out for that $9 breakout, because then that's what's going to give you the power of this last ramp here to get you up to that $12 mark. All right, you can see here with the gold, it's following its trajectory too. Should just move along sideways here until you get to the next ramp. That should catapult it up here to the $1,300 level, and then back up to the $1,352 level and beyond. So this is following the trajectory as indicated. So building support around this level, this 1220 to 1200 level, and then once you hit the ramp, it should be off back up to the 1352 level. So you're looking at a $130 run coming once it hits this ramp. $130 to the upside. All right, looking at silver, pretty much the same thing. It's just going to move around here, try to bottom out somewhere around the 17 mark here, somewhere between 16.50 and $17. And then once it hits this ramp, it's off to the races. Once it breaks that $20 threshold, you can look out because it's going to be making its run to 25. So we're looking at a potential $5 to $7 push coming here in the not too distant future on the silver. And what's going on with the Dow futures? Well, looking at the Dow Jones hitting new all-time highs at 18,918 on its way running to 1900. I don't think it's going to pull back anytime soon. I see us breaking above that 1900 easily, and we may even try to make a big ridiculous run toward 20. So here we come, 19,000 Dow. It's right around the corner, and then we'll be at 20,000. Just like I said, we'll be there very soon. 20,000 Dow coming to a city near you. You got a little bit of sideways congestion, more coming once you hit those new highs. And then you got somewhat of a little ramp here. This ramp is enough to get it above the 1900. 19 to be new support, and then it flattens out again. So nothing really dynamic, but we do have a ramp coming that could push it to the 19, at least keep it above 19,000 for a while. All right, looking here at the NASDAQ, a little bit different story. You can see that it's trying to break out. It had a pullback already to trend line support. Now it's trying to break out again, but it's struggling to stay above 48. So the NASDAQ is not as powerful right now as the Dow. You see this flat top, nice elongated flat top, stretched out sideways, flattened out. Nothing really happening here. All right, so it's struggling. It has further flattening out coming. Got a little ramp here, but it's not powerful. It's just more flat side. So more expanding of the trading range is what it's showing. So really nothing here. I don't see anything right now in the charts to indicate that this is going to get and stay above 48. It's struggling with 48. 48 is difficult for the NASDAQ. All right, taking a look. All right, that didn't come out right. All right, let's look at this dollar. I've been telling you for some time now that the dollar was going to run its trajectory toward a buck, going toward par. Well, that's what's happening right now. All right, the market hit a high today of par 28 and is now sitting at par 20. So it's trying to, get really on and popping here. All right, hasn't been this high in quite a while. Let's take a look. This is a weekly chart, and you can see the last high we had was par 60 back on November the 30th of 2015. So you can say a year ago we were here. All right, so it's going to need to close above that if it's going to say, hey, this is the new floor and we're going to take off like a rocket. If this dollar is really going to do something, then it needs to do it and do it right now. So this is the critical juncture for the dollar. Like I've shown you in prior videos, the dollar has a problem with par. It has a problem staying above par. All right, here you are here. All right, par 78.5. This was hit on March the 9th of 2015. Okay, so it has a problem with par. All right, it just does. Then you normally see corrections afterwards. So here in March 9th 2015 you hit that par. Then you came down here May the 2nd of 2016 and went to 91. All right, so that's quite the pullback. But see, because it happens over time, everything looks stretched out and not necessarily, it doesn't look like a crash. If it happened all at once, you would say, oh my goodness, what a massive crash. But because it did it gradually over time, incrementally, you're not really phased by it. And look, even the chart is showing signs that it's okay with it too. You know what I mean? So you don't see too much happening here. Then you just gradually break out as more money pours into it to keep it propped up, and then here you go again. So, you can't fight the Fed. The Fed's going to win at the end of the day, and that's what's happening right now. They're selling massive amounts of paper, gold, and silver to finance the propping up of the dollar in the stock market. Let's see what the petrodollar is looking like with all this Fed manipulation going on. All right, well, you can see we came off that high of 107.65 back in 2014, and then we hit a low here in March the 1st of earlier this year. So I'm sorry, February the 1st, 2605. So quite the drop, as you can see. All right, and now it's trying to get something going here and recover some of this loss, some of this collapse from 2014. So now that you've seen what's happening here, what we've seen in the interim here, now it's having problems with 50. So the crude oil, the petrodollar, is having problems with 50. Just like the dollar's having problems with par, crude oil is having problems with 50. Doesn't mean it can't blast off through it and puncture that and blast off from there over time. Just saying right now, this is where you are. You're just riding the top of the Kumo cloud, acting as a support, building a base, you can argue, for a blast off. So a lot of things to keep watching in the days to come in these markets. They are quite interesting indeed. And all I can say is, I don't know how you can make sense of it without the pulse waves. And with that said, we have the Academy coming up. Target date for the Academy now is looking like December the 1st. So you're going to want to sign up and enroll for that. More information will be coming, more explanations in further videos. And with that said, we have the new trading room up and running as well. And if you're not a part of that, or you want to become a part of that, go to pulsewavetrading.com. That's pulsewavetrading.com. You can sign up there, and you can learn how to trade these markets, how to navigate these crazy waters. Because, like I said, just looking at a chart, I can put any chart with any indicators up here. It means absolutely nothing. If you want consistent profitability in these markets, you need to trade with the algorithms. You need to defeat them, and the only way to defeat them is to trade with one of your own. Hence the weekly pulse wave price triggers. All right, so see you at the pulsewavetrading.com, and to the rest of you, be encouraged, and remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And overhead resistance is at $10.18. Next resistance is at $12.54, and then the next one would be at $15.85, putting it below the Kumo cloud of around 17 bucks, and it should try to peak out somewhere probably around the $25 level before correcting, and then $20 should be a nice strong support going forward. Alright, looking at AG is following a similar trajectory. Overhead sign of pullback here, but this is a really strong breakout candle. Alright, looking here at the JNUG, we got a similar situation going on here. This market hit a high today of $8.35, and you can see that currently it's at $8.29, so it's making a run too. You have your first line of resistance at $8.67, and then your second is at $10.96. Thank you for tuning in to another edition of the Vulcan Report. This is an intraday report for trading on November the 15th, Tuesday, 2016. You're looking at a chart right now of ticker symbol NAK or NAC. And as you can see, this market has pretty much exploded pretty nicely, getting back above that dollar handle. If you recall our previous videos, you would see that the market is following a very interesting trajectory now and is going to be shooting to continue to make 52-week highs, which is great because that's really what you want to see in stocks trading under $5. So as it stands right now, support is at 70 cents, and this market is looking to continue to close today above $1 and probably stay there as it gets up to probably about $1.50 before you see any six. And then the third would be $14.23, which is right here. And then that will put us right there below the Kumo cloud of around 15 bucks. And I do think this is going to try to get somewhere in the cloud before any kind of correction back to the $14 trend line, which should be new support going forward as this tries to break out of the Kumo cloud at around $21. Looking at Nugget, similar situation.